Hey traders, a global macro update here coming from Performante. We got basically the metals sector as a potential opportunity, in my personal opinion, mostly looking at platinum and palladium, the two metals used in catalytic converters. The platinum is used in diesel and palladium is used in gas catalytic converters. And that's a little bit of like some fundamental analysis, but we're going to go over two different little blogs post, whatever you want to call it here. First, it's going to say China auto sales growth seen for second straight month, boosting recovery hopes. So obviously with the sales of vehicles, they're going to need catalytic converters, especially with more strict regulations on emissions. It requires people to actually use more palladium and platinum in metals in order to actually create these exhaust systems for vehicles. So that's the first discussion. Not really going to get into it. You can find it just by Googling it. And this second one is going to be called U.S. auto sales in May encourage Detroit plan to rebuild inventories. So even in the States, we can see several automakers on Tuesday reported stronger than expected May sales in the United States, and the Detroit automakers said that they will work through their annual summer shutdowns to rebuild inventories as demand recovers from coronavirus shutdowns. The U.S. auto sector has reopened assembly plants following the shutdown, and automakers that reopened May sales said that they saw signs of recovery in consumer demand. So definitely that is more bullish in terms of the potential sales increasing over the next couple of months here in the next couple of quarters, which would mean that there's more of a demand for the metals that we're going to be going over today. So that's a little bit of the fundamental background. We're now going to get into the first metal. It's going to be platinum. And let's just take it back to the daily time frame. We see that, well, if we really want to get to it, let's go to the weekly because it is slowly decreasing, but we did actually make a pretty strong high there where we made a little bit of a bottoming. This was definitely, in my opinion, a little bit out of the ordinary because every single asset basically, except for the United States dollar and treasuries, went down. The United States dollar, everyone ran to the US dollar in order to flee for safety. Even gold, silver, every metal dropped. But then if we do look on the monthly chart, this descending wedge was held and the price was able to hold there for a candle closure. And then the next candle was extremely bullish, pushing the price back into the wedge. So there's no real perfect trend line that I can perfectly see. We do have one that is an anchor point right here, which is a little bit of ways, but I'm mainly working with horizontal zones right now because the key level that I currently see is around $1,000 for the next area of supply. Now going on to the smaller time frames, let's go to the 6 hour. We see that there was a nice symmetrical triangle that broke to the upside, and now we're looking for our second structural long opportunity to continue the trend towards the upside because of the fundamentals of car sales increasing. Platinum is also used in jewelry as well, so there is also that use and that demand coming in. And if it's a risk-on environment, if people are making more money, if people feel good, spend more in the economy, obviously that is going to be positive for platinum, whereas if you are looking at it in more negative sense, it would be more bearish. But in terms of auto sales, they are increasing in both the two largest countries that have the highest demand for vehicles, China as well as the United States. So that's the 4 hour. We'll get into the 2 hour here. I'm sure you are well aware, but we have a descending wedge that has a very nice breakout, and it's now retested this previous resistance zone for a new level of support. We had a break, retest, held that previous level of support, pushed up. We did hold this previous resistance, so this is now going to be a pretty key level that we are going to be looking at, this $900 level. But as of right now, in my opinion, it does look like a pretty good opportunity because this previous resistance was held very well. And then now it's going to act as a key level of support, and it's also in confluence with this previous resistance turning into 1, 2, 3 levels of support. So there's going to be additional demand pressure at this zone. at around 800 and let's say 60 to 70, right around here. There's going to be a lot of demand there. So in my personal opinion, that is the highest probability is for it to continue to the upside. We do have an expanding pattern right here where we have a series of lower lows and lower highs, but as long as we're able to hold this zone, I think we'll be able to consolidate, form maybe a potential wedge, and then we'll try to make a move towards the upside. And just looking at the structure that we have within this zone, I definitely think that if we do make a strong push, we could see at least this zone. The first target would be this zone right here if we're able to have that nice risk reward wherever you are going to be potentially entering. This is not financial advice, but I'm going to be definitely playing a part of this next move. But that's basically the structure. Let's now go on to the smaller time frames here. I don't really like to go beyond the 1 hour, but you can take a look at the expanding zone here where it's expanding volatility, and then we have a very significant level of support where we have not only the descending zone here, but we have on the smaller time frames, I respect that a lot less, but it's still valid where we have 1, 2, and that third touch, and then we have that just slightly ascending level of support there to hold that price there as well. So in my opinion, the highest probability situation would be towards the upside. We could be seeing a double bottom. That's definitely a probability to kind of validate this level as a demand zone. Would not be surprising, but even if we look at the 2 hour, very, very strong push. And then if we skip to the 4, we just have a big wick down touching that key zone, and the 4 hour actually closed way higher. So if you're looking at the larger time frames, as long as this zone here around 867 holds, I do think that we would be able to continue the trend up and then at least consolidate around here, form a little bit of a squeeze, contracting volatility, and then we'll get that next impulse push to the upside. Also, we will look at gold and silver. Gold is holding and slowly increasing, which is great for the general metals sector. We'll look at silver as well, but the main focus for today's video was going to be on platinum and palladium. So that was platinum. Let's now go to palladium. So, again, let's zoom out. This had a huge push to the upside. This was that sell-off back in early March. And then it's been contracting in volatility. We can see that there was another descending zone right here, along with this ascending zone that's able to provide a very strong level of support right here. And then the price has now pushed above this previous resistance, which is forming this double bottom. And then now it is in a confluence area of demand where this low is creating a higher low and pushing the price, creating higher lows, and we can just create a nice trend line holding that area, and then that's how we create a very strong level of demand, and we're squeezing, contracting in volatility towards this major demand zone, which in my opinion is pretty bullish. And we already had our first impulse push to the upside here, indicating that buyers are in the area. They are looking to enter in this, and with the fundamentals, if car sales increase, we do have both sides that we are able to trade. If the long-term outlook is continued to be positive for the automakers, this will look great. And then obviously if there is a sharp decline, we are traders, we have to be adaptable, we have to be flexible. But as of right now, the technicals and fundamentals, in my opinion, line up in a way that looks to be, in the short term, a bullish opportunity for these two metals. So let's now go into the smaller time frames here. And we can see we've consolidated in a very tight range, which I don't mind because I think we are going to be able to push up higher. We did get a pretty significant rejection back on June 1st, but we haven't broken yet. I'm looking for that confirmation, that break in a trend, because we could consolidate here for a little bit longer, and I don't really want to be in the trade if I don't need to be in the trade. But right now, it does look pretty solid. I'm looking for the price to patiently break out or kind of react in some sense that gives me an indication that we are looking more bullish. But in my personal opinion, this area is a pretty significant demand zone, and I think the easiest path for the price to follow would be a move to the upside to at least test these highs here and maybe even go higher. We'll see how it reacts, how aggressive it is, but you can really easily get a solid risk reward with how much demand pressure there is compared to the potential move that would be if it hit that 2160 high that we recently hit in May 20th. So now let's look at gold. Theoretically, we should have looked at gold first because that's going to kind of be the indicator of metals to some degree. If gold's doing really poorly, usually a lot of the metals are going to be doing poorly to some degree. So let's quickly look at gold on the large time frame. Let's jump to the 6 hour, zoom out a little bit, and then just discuss what we currently see. So there's this nice ascending trend line that we held for this squeeze right here. We broke out, we retraced, contracting in volatility, squeezing with the support zone and this new resistance. Pushed further, we gained a new high. We held the previous resistance as a new level of support. We failed to hold it, but we did have this ascending zone that was able to hold the price here, which was really good. And let's clear all that up. So now we're at a situation where we have a strong level of ascending resistance that is holding the price, or ascending support, sorry, holding the price, making higher lows, and we have a squeeze that broke, which is signifying that buyers are in the market, they're confident, they're pushing the price, breaking key levels of supply, and we do have a minor level of resistance right here, which got rejected initially back in, let's say, mid-April, and now we see it hold as a resistance again. I think we do have a wick here, so then if we drop a time frame, I guess, to the daily, we do have a pretty well respected structure for an ascending, let's go right there, ascending triangle where we have a key level of resistance. Let's just get our picture again. Right here initially, and then we see a major rejection with lots of wicks indicated on the daily chart. We can see on every time frame under a daily that this is a candle up and then a candle down, but we can see that is a major rejection, so there's sell pressure within that zone. But from where we currently are here to where that next key level of resistance is going to be, I think is probably going to be the least resisting path, basically, or the path of least resistance, which is basically what you're looking for in trading. So that's basically going to be my next target for gold, is from that low here, being able to push the price back up multiple times towards that resistance. We'll see how it reacts. If it's able to have a candle closure on the daily above that zone, that definitely signifies that there is strength within the bulls to not only bring it there, but hold it there. That is signifying something that a wick is unable to do, where it just gets rejected all the way down, and you may have to drop down a couple time frames, but daily, 4 hour, 1 hour, those are kind of the main ones I like to be using in order to identify either a potential fake out, or if it's a really valid break on the daily or 6 hour, or something that's a little bit longer than the 1 hour, 4 hours, definitely ideal. So that's my view of gold. I think we could see another move up. This line is respected, but I think it is less respected than this ascending zone, especially with this recovery. I thought definitely that was pretty bullish, and then especially once it broke this descending zone as well, that in my opinion was bullish as well. So that's a high level of confidence and conviction from the buyers, in my opinion. So I think that it will continue. We see a long wick here on the 6 hour indicating that there was buyers able to push it right back up, and then this current 6 hour candle is pretty bullish here, going way above the previous high within that previous 6 hour time frame. So if we're able to climb back up to the highs of this huge bearish engulfing candle, that would be very great for the bulls in short, and I think that we could definitely see this and potentially even break it higher, because I am pretty bullish on gold and the metals overall. Alright, this is what I see on silver. Is I see an expansion in volatility, and not great, I don't love it, but we see a low, lower low, or this is a higher low really, and we see lower lows, and then this is a lower low, so we created a trend line there, and then we have a nice trend line connecting the highs, which is looking really great. And initially we had this potential triangle here, but it broke to the downside. Now we just got to be patient, basically. I did put a midpoint right here, so I do see a potential opportunity if it does start to get back into the 1822 range, but as long as it's within this expanding price action pattern, I don't really want to be touching silver at this very moment. I'd rather wait, be patient, and look for that entry when it does break out to the upside, because I think 1860 is the next potential target. And that's a pretty good risk reward situation if you're able to minimize your risk to maybe like getting a 2.6, 2.5 risk reward. That would be a pretty optimal situation. If it does take a long time and then you get a strong push up, you could get something where you're going to be looking for something using the midpoint, or if you're really eager, you could be looking for that low, but I'm basically going to be sticking near this breakout resistance zone, and then going to be looking for that bullish engulfing candle to trigger me into the trade. So that's my plan for silver. And then we're now going to talk about the gold and silver ratio, basically just talking about the weekly chart, talking about this huge ascending wedge that has now really shifted momentum to the downside, making it extremely bullish for silver. It could be bullish for gold, and it is bullish for gold, but it's just the fact that silver is way more bullish and appreciating at a greater rate compared to gold. And we can see that with this major move to the downside. So with this ascending resistance that's now our support, we do see that on the weekly we are getting some level of resistance turning into a new level of support here, where there's now going to be demand pressure. We can see that this was a candle closure on the way up, which definitely signifies that this is an important area. On the daily, we do see that there is some hesitation, but it could just be, you know, a stall and it continues down. Overall, I'm bullish on metals. Gold definitely, silver even more than gold, as long as it's creating these nice, easy to work with structures. Really, silver has been really good, phenomenal in my opinion, and I'm just going to continue working with what it's providing. We have a major zone at 1850 and around 1870, so that'll probably be the next push here. Not going to be taking, not going to be too greedy. I see that we've had a really good run here, and if it continues, that's great. I'm going to work with it, and if it doesn't, I'm going to go to something else that does. But don't fix what's not broken, and I'm going to continue with this process because it's been doing pretty good. Gold as well, I've been a little bit hesitant because the gold and silver ratio has been plummeting so much, so I've just been trading silver, which has been pretty good, but gold is definitely stabilizing and holding its ground and slowly grinding up here after a little bit of a worry, which I'm really happy about, that it's continuing to move forward, and we could even get that high of 1785-ish, somewhere around there, to 1800. That would be not only the major level of previous support and resistance we see. If we look back, key level of resistance, and then also we have that ascending trend line connecting the higher highs in confluence with that zone as well. So we could definitely see that push up if we do get some significant demand to come into the market. I would definitely be interested in looking to trade gold, but silver is definitely something that is a lot more aggressive when it does push to the upside, which I do like. So that's my analysis of the metals. Hopefully you enjoyed it. If you do have any questions, drop them in the comment section below and I will answer them. If you would like to learn more about them, we do have other videos on our YouTube channel that you could check out, and we do a more thorough analysis of more the fundamentals of the precious metals and the two metals that people know less of, palladium and platinum. So if you found this useful, educational, entertaining, it'd be great if you would subscribe to our channel. It does help us out, and if you give this a thumbs up, that would be great as well. So thank you very much for watching, and until next time, have a good one.